IRS Form 8815, exclusion of interest from Series EE and I U.S. savings bond issued after 1989. So the federal government has a tax incentive for people who use savings bonds or U.S. savings bonds specifically to pay for qualified higher education expenses. So this is a fairly straightforward form, and basically what it allows you to do is it allows you to report the amount of interest that you would have paid or that you would have earned, that you would have paid taxes on from either Series EE savings bonds that were issued after 1989 or I bonds, which are inflation savings bonds that are adjusted for inflation periodically. So the exclusion of interest simply means that you can report the interest on your tax return and not pay taxes on it. The qualifications are that you have to have qualified higher education expenses, they have to be qualified savings bonds, and that the taxpayer must meet certain income thresholds. So we'll walk through this form. We'll kind of go through a couple of the steps that you might need to determine so that you can figure out the tax excludability of your interest. So I've pre-filled this form with our hero John Doe, Social Security number at the top. We'll just say that he was paying college bills for his daughter Susan Doe, who attended Acme State College. And in line 1A, you'll put either yourself, your spouse, or as many dependents, usually college-age children, who are enrolled at an eligible education institution. Now, the form instructions basically state that as long as the education institution promotes higher education in a variety of capacities. So it could be a vocational college, it could be a technical college, it could be a community college. And as long as they're able to participate in federal education assistance programs, which virtually every accredited institution is able to do, then they meet the criteria for being an eligible education institution. So in line 2, we entered $20,000 of expenses. So qualified education expenses include a lot of things, but they don't necessarily include room and board, and they don't include sports-related activities or hobby-related activities, extracurriculars that weren't directly part of a degree or certification program. So if you took a volleyball class and you had to pay athletic fees associated with the class, and that class was required for your graduation, you can include those costs. But if you played intramural volleyball on the side and you had to go out and buy volleyball equipment, then you wouldn't be able to include those costs. So the form instructions kind of go into a little bit more detail on how you can determine qualified education expenses. But basically, anything that you came out of pocket that wasn't offset by some other outside source, so scholarships and things of that nature, costs that you didn't already take a tax credit for elsewhere. So just when you're processing this with the education credits that you might be eligible for, either under the American Opportunity Tax Credit or the Lifetime Learning Credit, one of those, just kind of keep in mind that you can't double dip with credits that you're already taking and then excluding interest that was used to pay the same expenses that you already got a credit for. So we just put in line 2, $20,000. In line 3, you'll put the total of any non-taxable educational benefits. So again, the non-taxable scholarships, fellowship grants, things of that nature. So we put in $5,000, and in line 4 we simply subtract that. So right now $15,000 is the amount of qualified higher education expenses that we reported that wasn't already offset by a scholarship or something else. Now obviously if the amount of scholarships that you receive is equal to or more than your higher education expenses, well then you're not going to be able to use all of the scholarships, but then you're also not going to be able to exclude the interest. So if you cashed in a bunch of bonds, but then you ended up, being made whole, then, well, you're probably going to have to pay taxes on those bonds. So in line 5, we'll enter the total proceeds, principal and interest from all the Series EE and I bonds that were issued after 1989 and that you cashed in during the tax year. So I just put in $20,000. Of that, we calculated on line 6 that the interest is $5,000. So you can either file IRS Form 8818, which is a voluntary form that helps taxpayers keep track of their savings bonds, or you can skip down to the line 6 worksheet. And so this worksheet down here in the form instructions will help you calculate the interest on your bonds, right? So you start with the amount that's in line 5, the face value of all post 1989 paper series bonds. You multiply that by 50%. Then you enter the face value of all the electronic series bonds that either you converted from paper to an electronic format, and all Series I bonds that you cashed in. So if you don't recall paper bonds, usually like $100 paper Series EE bond would be $100 face value, but you actually paid $50 for it. And then based on the timing, you'd have to look up and see when or how much interest accrued over what period of time since the bond was issued. Now all Treasury bonds are in electronic format, and you can track the status of individual bonds by setting up an account through Treasury Direct. That's probably the simplest way to be able to keep track of all of your bonds. So you walk through this line 6 worksheet, and it'll help you determine how much of the bonds were interest versus the principal. Or if you have a separate way of keeping track, you can use that as well. So again, that number, we calculated it offline. We just pulled up $5,000. So in line 7, if line 4 is equal to or more than line 5, enter 1.00. So line 4 is actually less than line 5. So and happens to be exactly 3/4 of that amount. So we had qualified education expenses that are 3/4 of the amount of our savings bonds that were issued during the tax year. So that's going to force us to only be able to account for 3/4 of the interest. So if the education expenses had been greater than the amount of proceeds that we cashed in, then we'd be able to consider the full value. So 3/4 of the $5,000 amount is $3,750. So now in steps 9 through 11, we're going to go through adjustments for modified adjusted gross income. So in order to calculate your modified adjusted gross income, there is another worksheet, and that is on line 9. So there's a line 9 worksheet where you're going to be pulling certain information from either Schedule B or your 1040. You're going to walk through that. However, before you do that, you still have to take steps. For example, if you receive Social Security benefits, then you're going to have to calculate the taxable amount of your benefits. If you're claiming both the premium tax credit and the self-employed health insurance deduction, you're going to have to complete worksheets in IRS Publication 974. If you made contributions to a traditional IRA and you are covered by a retirement plan at work, you're going to have to calculate your IRA deduction. You're going to have to complete certain parts of your tax return, and then you're going to have to account for, if you filed any forms relating to foreign earned income, exclusion of income for residents of American Samoa, exclusion of income from Puerto Rico, employer provided adoption benefits, or if you have investment interest expense based on royalty income. You're going to have to go through all of those steps, account for those before you begin work on the Line 9 worksheet. Okay, so if none of those steps apply to your situation, then you can just go straight through the Line 9 worksheet, and once you come up with this number, you'll put that into Line 9 itself. And again, this is your modified adjusted gross income. So the IRS throws around the term modified adjusted gross income pretty loosely. If you happen to be familiar with Social Security and IRMA, which is the income-related Medicare adjustment amount, that's the kind of the income-driven Medicare premiums. There's a modified adjusted gross income amount related to those, and this is completely different. So when you're thinking modified adjusted gross income, you need to think MAGI specifically for higher education expenses. And the way you calculate that is going to be different from your modified adjusted gross income for any other tax-related issue. So if Line 9 happens to exceed either of these thresholds based on your taxpayer status, then you can't take the exclusion. Your income is too high. In this case, it's not too high, so we can keep going. Then you'll enter these phase-out numbers, $128,650 for our hero taxpayer. And so if the MAGI was in excess of this, then we would have to basically phase it. It's called a phased out exclusion, where you might be able to take a partial exclusion. You would have to calculate based on how much, right? So there's another, you can see that there's another amount for a fraction here, and that's to calculate the phase out. So fortunately, we're not in the middle of the phase out. We're below that phase out threshold, so we're going to enter 0 on line 11. We're going to skip the calculation on line 12. We're going to enter 0 on line 13, and then we'll just bring down the number from line 8. Okay, so if for some reason our modified adjusted gross income was at the halfway point, and I'll have to think about this for a second. Our halfway point here is 143,650. Okay, right? So it's halfway between this number that's a complete phase out and this number, right? So basically we would subtract this amount and we would get $15,000. Now you would divide line 11 by $30,000 and we would get a decimal of 50%. Then we would multiply this amount by the 50%, and we would come up with, and then we would have to subtract line 13 from line 8, and we would get, that's the amount of excludable savings bond interest. You would enter this not only on Form 8815, but also on Schedule B in line 3. So that's the amount of savings bond interest that you would report on your tax return, but exclude from taxable income, specifically for qualified higher education expenses. That's all we have for this video. If you want to learn more, we go into a little bit more depth in our written article, which you can find on our website. Simply go to teachmepersonalfinance.com, type in IRS Form 8815 in the search bar, and you should see our article. If you like our articles, please subscribe to our newsletter. And if you like our YouTube tutorials, please subscribe to our YouTube channel. As always, if you have any questions or comments, please put them in the comments section, and have a great day. Thank you very much.